Hi, how are you doing today, Denise?
Hello, it's so good to see you today, Tiffany.
Yeah, so I've been wanting to get on this video for a while with you. I wanted to give our buyers some ideas of how they could rearrange their finances or how to look at their finances to find out how much they could actually afford for a mortgage. Um, just in the planning process to figure out what they can actually afford before they go to the lender. Um, and then a few other questions as we go, just to help
Yep.
out the buyers in this crazy market. So
I'm here for it.
yeah, so we'll go ahead and start with the first question. I really wanted to know, how do buyers prepare to buy a home in this market? What would they do first?
So this is going to go for any market because first of all, I'll tell all the first time buyers out there, if you feel overwhelmed and terrified, that is normal. You are supposed to feel those things because you're buying a house. So a few things that you can look at before you even speak to a lender. The first thing, and this is a me personal thing, not so much a lender thing, but I did this when my husband and I bought our first house. We went to our bank, which is USAA. We opened up an additional checking account. And what we did was we did an automatic withdrawal to deposit into that checking account weekly. I think we did $5 a week in the beginning. Whatever you can afford that you won't notice, do $2 a week, do $3 a week.
Right.
And ignore it. Because one day when you do buy a house and your water heater blows, you don't want to put that on a credit card. You've got the money for it. So basically you're creating a house account. Now, if you end up not buying or you end up doing something else, that's still extra money saved, and we could all use some extra money saved. So that's the first thing I advise literally everyone to do, because it just helps save money without thinking about saving money,
Right.
So that's my first thing. My second thing is that lenders look at your income and we look at your debt load. So what a lot of people don't realize is that when we look at debt, we're looking at monthly payments. We're not looking at the amount of debt you have in total. So you have a $300 credit card, but $5,000 balance on it. We're not looking at the 5, we're looking at the 3.
Right.
So that's good to know, because for credit cards and things, sometimes when you do pay them down, it doesn't make a big enough difference in that monthly payment to help you. So the biggest thing you can do with that is, pay off debt that you can, especially credit card, just because revolving credit gets you in a lot of trouble.
Yeah.
And that'll help your debt to income and help you be able to afford more things. So does that made sense? Yes.
Oh yeah, definitely.
Yeah.
So going on into the next question, how do they figure out their total budget for what they could afford for a mortgage?
So that I would definitely recommend getting with a lender on that. But I'll give you a rough idea if you just want to do it, like if you're a numbers person. So you're going to take all of your monthly bills. So whatever you pay monthly, your credit card, your car, and then you're going to take what you want to pay monthly. So let's say $2,000, you're going to add that to your income your debts, if you will.
Right.
Then you're going to divide that by your income. And that's going to give you a percentage, and that's your debt to income. And we as lenders like to see that under 50%, definitely. So just for
now for FHA or USDA, what would that be for them for the debt to income?
So you always, even with VA, FHA, any of those government programs, you still want to stay somewhere around 50%. It just gives you better odds of being automatically approved and things like that. There's not so much a cap for the government loans. It really is dependent on each particular file. You can go over 50%. I see a lot of VA go over 50%, especially.
Right.
But just to be sure, because we do factor in other things like your credit score, late payments, things like that. So if you want to be super sure, definitely get with a lender, definitely have them run your numbers. And just FYI, it doesn't cost anything to put in a loan application. So I think that stops a lot of people. So just FYI, we are here to give you guys an idea and to see if you actually are in the position to buy, or maybe you should wait a little bit.
Okay. Now, should they shop around with several lenders?
You can, and I'm glad you brought this up, actually. It's always good to compare, but here's the thing, especially in this market, we all get our rates from the same places. Right. So if you're shopping for rates, I think it's going to be not a huge difference. The biggest thing that you guys want to look for when you're looking for lenders, especially if you're first-time home buyers, you want someone who communicates with you You want someone who explains things to you, because this is a lot of your money moving around. You're taking on the biggest debt of your life. You want someone in your corner that you can trust and you can ask questions, you know, like I tell my clients, ask the same question 100 ways and I'll figure out 100 ways to explain it to you until you understand it.
Yeah.
Because it's so much money. So I would shop more for someone that you communicate with, you trust, you click with, as opposed to shopping for rates. Because right now it's especially right now, it's pretty futile to be rate shopping. And if someone's giving you too good to be true of a rate, it may be. So consider that rates cost money sometimes in points and things. So that's a long way of saying, don't look so much at the rate, look at the lender and the person that you're dealing with.
Okay. Yeah, no, that makes complete sense, especially on a big deal. Like you're saying, you know, it's their money. It's a big chunk of money. If they're first time home buyer, it's really stressful. They don't know what's going on. So it's great to have a great lender, a great realtor to be able to explain the situation, help them understand it to where it's not quite as stressful.
Exactly. If we can take a little bit of stress off these guys, I mean, job done, you know, because it is a very, very stressful thing buying a house.
Yep. So that, I guess, leads us into the last question. You know, everyone out there, you know, you see it everywhere, buy downs. You know, I want to talk about buy downs to see, you know, what's the best way to go about it. Is it a really good option, or is it kind of just, you know, hype?
So buy downs actually are a really good option. They're just not for everybody. It's very dependent on your financial situation, on what loan you're doing. Just to give you a quick idea though, for like, I do predominantly VA, so I'll do the 2-1 VA buy down that I recommend, or sorry, that I have.
Right.
So basically what we do is, let's do easy numbers. Let's say the rate is 6%. I haven't even looked at rates today, if I'm being honest. So rates at 6%. What we're going to do with a 2-1 buy down, we are going to qualify you for that 6% rate, which is today's rate. But for the first year, you're going to have a 4% rate. The second year, you're going to have a 5% rate. That's the 2-1. So you're dropping it 2, you're dropping it 1. And then the third year, if you don't refi by that time, you're going to go up to that 6%. Now, the catch is that when you are doing these 2-1 buy downs, the seller needs to pay for that buy down. That's where the money is coming from to buy down that rate. So if you have enough money for closing costs, for example, and you want a lower rate, a buy down may be for you if you can get the sellers to pay those seller concessions for that rate. A lot of sellers right now, Tiffany, you can correct me if I'm wrong, because it's not my side of things, but I would say right now, sellers aren't willing to pay closing costs and a buy down, correct? That's a lot of money.
Yeah. I mean, a lot of times it's one or the other.
Right. Right. So that's when a buy down is good, when you know you've got your closing costs and you're solid. That may be a good idea for you, but you have to remember with 2-1 buy downs, they're saying rates are going to come down, but we don't know the future, right? Make sure if you decide to do a 2-1 buy down, you are comfortable with that high payment, that payment you're going to get in the third year. You have to be. They say marry the house, date the rate, right?
Right.
You're dating the rate, but you also need to be okay marrying that rate if you decide later you fall in love and want to have some kids with it. So,
I agree completely. Well,
so that's my big 2-1 buy down. It's a great tool. I have closed a few since they've come out, but we just need to make sure, you know, talk through it with your lender and your realtor, because it is both sides of us. We need to know if the seller's even willing to pay concessions like that. And then we need to know if you can cover your closing costs and things like that. So definitely a great tool, a great product for some people, but I would definitely, you know, consult a realtor and your lender to make sure it is the right thing for you.
And now one more question. So say they do the buy down, the 2-1 buy down, and they get to that where they're back up to the 6%. They can still refinance at any point in time after they reach that 6% and their buy down has technically ended.
Yes. So there's no like limit for the, you don't have to wait so many days for the buy down. It's more of what you have to wait in terms of the loan. So for example, VA loans, and this is not a me deal, this is an everyone deal. You cannot refinance a VA loan until 210 days after you make the first payment. Okay. So you will have to wait a little bit. I know FHA is shorter and conventional is even shorter, but just keep that in mind. It's not going to be I'm going to buy this and rates drop tomorrow and I'm going to refi tomorrow. That's not quite how it works.
Right. Yeah, exactly. Yeah. Well, and at least that's a good time frame because they have that 2 years, you know.
Oh yeah. Plenty of time to refinance if you wanted to. And you know what? If rates go sky high, they go to 20%, not saying they're gonna, but
right.
you're protected on that end too.
Yeah,
Because
exactly.
you've locked in that rate. So either way, you know, if you got to look at it positively, or you can't look at it like, oh, well, I'm going to have to pay sick.
Yep,
But
exactly.
you have to consider again where you are in your particular file. So
Okay. Yeah, I mean, I think that's some great information for our buyers out there. You know, we're here to help you understand the process and help it go smoothly for you. And obviously, the less stress there is, the better. And so I want to thank Denise for jumping on today and answering these questions for us. And I'm sure we'll have her on again. I want to make this kind of a regular thing. So yeah, thank you, Denise.
thank you
And
for having me. This was fun.
yeah, and you have a great weekend, and we'll catch up soon.
Perfect. Bye, everyone.
Bye.